from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde, in for Emily Chang. This is Bloomberg Technology, and coming up in the next hour, cries of censorship. Former President Donald Trump slaps lawsuits on Facebook, Twitter, and Google, saying they violated high right to free speech after they pulled his profiles. We'll have details. Plus, China's crackdown on crypto mining will have what it means for prices, the mining environment, and regulation here in the United States. And more on the wheelin' and dealin' from Sun Valley, where the annual Allen & Company retreat is underway. We'll get an update on the meetings of billionaires and power brokers. Those stories in a moment, but first, U.S. stocks rose to record highs once again. I mean, even the Nasdaq managing to eke out a tiny gain. Bloomberg's Kriti Gupta, you got it, the lowdown.
Really interesting because you are seeing the S&P 500 higher, the Nasdaq 100 higher, but even yields are dropping a little bit. So people are buying that treasuries. And of course, you have risk sentiment all wrapped up in a bow with Bitcoin actually higher. Well, now lower, but higher in this previous session. Looks like they've started it a little bit. But let's just take a little bit of a step back here. Let's zoom out and look at the trade that's been doing very, very well. Those stay-at-home stocks are coming back. Caroline, you mentioned the Nasdaq is eking out that gain. It doesn't seem like the growth stocks are facing just as much pressure downward as they did earlier in the year. And you can really see on this chart starting to slant higher a little bit when you compare it to some of those hotel stocks, for example, really showing that recovery trade not doing so well in the month of June. Let's also look at what isn't doing so well in some of those subsectors of that tech trade. Remember when it all used to trade as a bundle? If big tech did well, it really trickled down all the way to those Chinese ADRs, biotech, stocks, semi-index. None of that is doing well today. Of course, the Golden Dragon Index, that's really has a lot to do with the Didi IPO, shareholders coming back and saying, well, you know what, that's not fair. A lot of those early investors not getting the deal that they wanted. And of course, that sentiment is really trickling down, like I said, into those subsectors of tech. I do want to highlight, Caroline, before we wrap this up, this one last story. This, of course, coming from Google this time. You are seeing shares down in after-hours trading after news that several states are suing the company. This would, of course, make it their fourth monopoly lawsuit, Caroline. So let's just see how much of the action translates into tomorrow's trading session as well.
Yeah, it doesn't really seem to be affecting the market after hours too much. Kriti Gupta, thank you for the lowdown. Let's stick on that Google news because, well, Kriti was just mentioning dozens of states poised to lob antitrust charges again against Alphabet over alleged Google Play Store abuses this time. Now, this new case would be the fourth monopoly lawsuit against Google. We'll keep following this story and bring you details as they become available. Let's talk now to Tom Giles, who I think is here to really dig into some of the news on, first and foremost, let's stick with Google. Let's stick with Alphabet. The price hasn't moved much in shares after hours. Why? Was all of this factored in some way, shape, or form?
You know, there are so many lawsuits right now that are being leveled against Google. I think there's a little bit of fatigue that's set into the market. I think people are waiting to see the details of this. You've already got the DOJ coming against Google over its domination of the search market. What the states are looking at is the way it handles Google, the Play Store. And this is something that a lot of publishers, this is a complaint that publishers and website owners and app developers have leveled against Apple as well, right? These two companies are the gatekeepers for all of the sale, the way that apps are distributed, the way things are purchased in apps. And people are really fed up with the fees that these companies charge, Google in particular in this case, for the privilege of being, distribution through the store. And the fact is, if you're an app developer, you don't have a lot of other ways to get your apps out there other than through Apple and through Google. And so the sense is that they're abusing their domination of this market.
Okay, so that's the sense. The question, of course, is, who gets there first almost, the courts or Congress, Tom? What's so interesting is not only is Alphabet being attacked by, well, the courts here and indeed some of the states, but an old president as well, and not just Alphabet, but what do we learn in terms of the suing that's going on of Mark Zuckerberg, of Jack Dorsey, coming from previous President Trump? What's he trying to achieve here?
Well, It looks like it's about publicity and fundraising more than anything. We spoke with several First Amendment lawyers today. We got a lot of inbound commentary on the former president's lawsuit against these companies and their chief executives. Frivolous, a failure to understand the First Amendment. One law expert called it DOA, dead on arrival. So in terms of actually getting anywhere with alleging abuses of the law, it doesn't sound like the former president is going to make much headway. What it does seem to be is very much gaining, attention to himself, to a possible play for the presidency in the future. And immediately after this, it was turned into a fundraising plea. Messaging went out to his supporters to say, help me in my fight against big tech, and donate. Which sounds to me like somebody who is at least seriously considering further run for office once again. So does seem like it's a lot more about publicity, about wanting to be in the spotlight that these companies have taken away from him. Remember, it was his Twitter and Facebook and YouTube that he got his message out there. That's gone away. What does he have? What recourse does he have to get his message out there?
Well, seemingly clearly able to still garner a crowd for the time being. Tom Giles, really great insight there on some of the legal action that's going on across big tech. Let's divert our attention for a moment, not just US big tech, but Chinese big tech, because another tough day for Didi as its directors and underwriters were hit with 2 US shareholder suits. This after a Chinese government crackdown sent the ride-hailing company shares plummeting shortly after its June 30th initial public offering, of course. Let's bring in Bloomberg Sherian, the co-anchor of Daybreak Asia, who's been all across these stories, and give us the latest in the woes that beset Didi at the moment and its management.
Yeah, I mean, it's really been tough for Didi, hasn't it? I mean, since they're listing this GTV chart on the Bloomberg showing how tough it's been of a ride for the shares, now below $12 a share. Of course, as you mentioned, we had that 2 U.S. shareholders sued saying that the company failed to disclose ongoing talks when it comes to cybersecurity laws and regulations. This is what shareholder Rafael Espinal had to say in the New York suit, that rather than disclose the known discussions, the registration statement vaguely discussed China's regulatory regime with regards to data security. Remember, on July 2nd, the Chinese authorities started an investigation on Didi, and then 2 days later ordered the company's app to be removed from app stores. And Bloomberg has also learned that as early as 3 months ago, Didi was told to delay this IPO.
So plenty of question marks for the company itself, for the bankers that were on the deal. I mean, it just goes so deep. But aside from Didi, it has spill-on effects of future companies wanting to list in the US, right?
Yeah, we have seen Kriti just talk about that spillover effect when it comes to those Chinese tech companies that have seen the pressure here in the US markets as well, the Golden Dragon Index. We have seen it, of course, with investors really focused on what China will do from now on. Right now, Bloomberg has learned that Beijing might be closing that loophole when it comes to those IPOs overseas, especially in the US. What they were doing so far, these tech companies, including Alibaba and Tencent, is that they were incorporated overseas. And we're talking about places like the Cayman Islands, the British Virgin Islands. So they would transfer their profits to that offshore entity, and then those shares could be owned by foreign investors. Now, Beijing is looking to have that structure, which would be the variable interest entity. Actually, they need to seek approval from Beijing before they go about doing that. And of course, that puts a lot of the highlight, of the spotlight on these upcoming potential IPOs, like logistics and delivery firm Lala Move, for example. They had a secret U.S. initial public offering. They filed confidentially. We were also watching what ByteDance might do.
Owner of TikTok. Plenty of people wondering on that one, and plenty of bankers wondering on it, right? Because they must have been in negotiations. There must be, U.S. bankers out there who wanted to make a tidy fee.
Yeah, when it comes to Didi, for example, Morgan Stanley, JP Morgan Chase, Goldman Sachs, for example, were the underwriters. Those Wall Street banks have made such big profits from Chinese firms listing in the U.S. Of course, we know $70 billion or more being raised by Chinese firms in the past decade. They are the biggest losers here. And not to mention, obviously, the Chinese tech companies. This GTV chart on the Bloomberg showing how Chinese tech companies traded in Hong Kong have slumped more than 30% since their February high. About $18 billion, of course, wiped out of Didi already as one stock. And valuations perhaps getting cheaper, so that might be the upside for investors looking to invest in this sector. We know that a lot of that money has also flown to Hong Kong exchanges, for example, trading at a 3-month high because there's speculation that more Chinese companies will be listing domestically now.
Fascinating one to watch. We continue to see the investor fallout, the bank fallout, the fallout from every direction. And as to whether we'll see many more IPOs, Sherry Ann, we thank you so much. Meanwhile, coming up, we'll head to Crypto Galaxy to find out where prices are settling and where they might be headed, especially amid a China crackdown on mining. And our Spencer Bogart of Blockchain Capital about it all. He's next. Meanwhile, Apple closed at a record high Wednesday, smashing its January peaks, and Wall Street analysts are forecasting a stronger rally over the next 6 months, with iPhone sales poised to climb. This is Bloomberg. Companies like Coinbase, Kraken, Ripple, just a few of the crypto companies in Blockchain Capital's portfolio, and the VC firm's fifth fund now boasting several strategic partnerships, including those with Visa and PayPal. Companies that have shown, well, crypto conviction. With more on the fund, crypto prices, and of course regulation, let's welcome Spencer Bogart, of course, of Blockchain Capital. Spencer, great to get some time with you. Talk to us first and foremost about your new fund, about money that I keep on hearing institutional money is coming to the space. It's sat on the sidelines. But at what point is it going to get in? At what point are we going to start to see money being put to work to, well, get everyone excited about at least where prices are going of certain crypto assets?
Well, there's a lot of institutional participation already in the market. I mean, we're certainly seeing that with our fund. So we have several institutional participants, including our strategic partners in our fifth fund here. But you're also seeing it broadly across the industry in terms of allocations to crypto assets directly. And I think a lot of that is really being backed up by data on chain that's showing the traction and the revenue that many of these crypto assets are generating.
Where are they really looking now? Are people coming to you into your fund because they want access to DeFi, to certain new protocols that perhaps they don't want to get into the weeds on, to have the time to do the due diligence on, rather than perhaps just Bitcoin, for example, or where the obvious place to put your money is?
Yeah, so it does vary a little bit depending on the particular LP that we have in our fund. On the high level, generally they do think about it as an easy button for exposure of, listen, I believe that there's something here. I believe that it has asymmetric upside potential, but I don't have the time to, dedicate a team of 15 people to focus on this industry full time. So, hey, Blockchain Capital, why don't you go ahead and do that for us? Now, the slight difference would be some of our strategic partners. So people like Visa and PayPal that are investors in our fifth fund here. And really for them, it's acknowledgement that this industry has strong potential for them and they want to build products in the space. But they recognize that in order to get those products to market quickly, they're going to need to partner with some of the startups in the crypto industry to be able to accelerate their product roadmaps and really hit their objectives.
So almost your sort of that introduction, the Didi they need to do to sort of understand where they can be eyeing in this space. Spencer, I'm interested in the retail side of this because for many, they felt it's been quite laborious to get into the crypto market, quite hard to negotiate, to put your money to work. Many had wanted to see an ETF. Is that likely at the moment? Some feel that the SEC isn't quite as perhaps crypto-friendly as they initially thought it would be.
Yeah, very unclear in terms of a timeline to an ETF. But in the meantime, that's not really inhibiting any flows from retail investors into crypto assets. So instead of going through their normal brokerage app and buying a Bitcoin ETF, they're buying things like Grayscale's products like GBTC, or they're going directly to Coinbase to access crypto assets directly. And so for a lot of people, yes, there is quite a bit of additional work to be put in terms of deciding which assets you might want to own for long-term potential. But that's no different than, say, scouring early stage publicly traded tech companies or even the S&P 500 to decide on particular investments.
Has this recent volatility that we've seen in Bitcoin, the sudden highs up in excess of 60, the sudden fall back to about 30,000, which is where we've seen the bottom for the time being, it feels like, Spencer. Has it driven anyone away again from crypto who've been looking at it. It's interesting following Nassim Nicholas Taleb, of course, the guy who wrote The Black Swan, the guy who's an options trader who sort of foresaw what happened in terms of the first financial crisis. He did own Bitcoin, and now he's saying, look, it's too volatile. He just can't work with this for the time being. It's a failure, he calls it. And then he's not also liking DeFi either. What do you say to sort of critics like that?
Look, so I think overall to your first question, Caroline, in terms of does any of the market volatility drive away some potential participants? Sure. I mean, I think we've seen this through all of the cycles. So at Blockchain Capital, we've been deploying capital to the industry through several different crypto cycles now. And we certainly saw a surge of new entrants in, say, 2016 and 2017 that maybe walked off the playing field, so to speak, in 2018, 2019 during the bear market years. But a lot of those people that come in and build products in the space, they don't disappear, right? When Square and Visa and PayPal come in to come build products, they don't nix that product roadmap just because prices fell 30, 40, or 50%, right? These are companies that are building products over a 10-year time horizon, and they want to start going on that right away.
Love the hodl in the background. Thank you, Spencer Bogart of Blockchain Capital. Great have some time with you and all the insights. Meanwhile, coming up, understanding the complete set of proteins expressed by a living being. It's the mission of Nautilus Biotechnology, which is making its mark in the effort to accelerate drug development. We'll meet the CEO next. And as we go to break, gene editing biotech's performing strong this year. Stocks like Regeneron, Beam, Intellia Therapeutics, of course, all up, showing big gains. We've got you covered on the biotech space. This is Bloomberg.
As regarding to what you have just mentioned about the recent attack on United States and other Western countries' infrastructure, I would like to say you that Russia didn't participate in such attack, and Russia didn't stay behind the curtain of such attacks.
Russia's ambassador to the US there, Anatoly Antonov, speaking with Bloomberg TV's Balance of Power earlier. Now, he reiterated that Russia was not involved in the hack of the RNC last week or the 4th of July weekend ransomware attacks. You can watch more of that interview on Bloomberg.com. Meanwhile, in order to accelerate drug development and personalized medicine, the proteins in organisms must be understood effectively. But our ability to measure proteins is actually still lagging. Startup Nautilus Biotechnology is developing a next-generation platform that uses advanced imaging, machine learning, biochemistry analysis to scan proteins at higher precision. Joining us now is its CEO and founder, Sujal Patel. Sujal, talk to us about the investigation of proteins. Why is it lagged? Why is it so important?
Thanks, Caroline. Well, so Nautilus is building a new platform to comprehensively and quickly measure proteins in a sample. And proteins are important because all of your cells in your body, and there's 37 trillion roughly in an average human, your cells are made of proteins, and proteins do all of the work in your body. Over the last couple of decades, humanity has made it easy to measure DNA in a sample, like a drop of blood. For example, I could take a drop of blood from you, I could analyze it in a couple of days for less than $1,000. I'll have 99% of your DNA. The breakthrough that enabled that has never occurred for proteins. The analog, if I take that same drop of blood and I want to know what proteins are in that sample, the best we can do as humanity, after spending weeks and tens of thousands of dollars, is get to approximately 8% identification of what's in the sample. And that has broad implications across therapeutic development, precision medicine, and has really hampered the delivery of this personalized medicine wave that we've been talking about for the last few decades.
So, why has it been left behind? Is it just incredibly difficult? You're putting money to work, you're wanting to get people involved, partners are interested, but how hard is it going to be to get more than 8%?
That's a really interesting question. And I think one of the things that I think would be really interesting to talk about is that the way that humanity conquered the genome is by borrowing some of the processes from nature. Nature already has processes to copy and read DNA. Those are necessary for cell division. And with that, we are able to take DNA from a sample and amplify it so that you can make a bright enough signal that you can read. For proteins, once something becomes a protein in your body, it can never be copied or read back. And so the technology required to read it is quite difficult, and approaches have been very slow to develop. about 5 years ago, my co-founder Parag Malik, who's Stanford faculty, came up with a very unique idea, which is really an idea rooted at the intersection of computing, data science, and biochemistry to bring a novel approach to not just measuring 8% or 10% of the proteins in a sample, but measuring comprehensively 95% of the proteins in a sample.
I mean, what's been so amazing about 2020 is how we've seen suddenly biotech reach center stage. The decade of investment that we saw in mRNA, in what we now see as CRISPR developments, has really helped us have breakthroughs when it comes to the vaccine race that we've seen upon our hands. But what, in terms of investing in knowing our proteins, what's that going to lead to, do you think? Can it push us forward 5-10 years?
Yeah, that's a great question, Caroline. I think that we should celebrate the enormous accomplishment that the scientific community has delivered with mRNA vaccines and with the response to the COVID-19 pandemic. One of the sad truths, though, is over the course of the last couple of decades, the rate of new drugs being approved by the FDA has not significantly increased. And during that 2-decade period, the spend in research and development in pharmaceutical companies has nearly quadrupled. And if you look at what's going on today, biopharma has picked off many of the easy drugs for common ailments, and they need much more information that they can apply machine learning and deep learning to be able to figure out what are the differences between healthy and sick cells, how do I build a better therapeutic. And the promise of the technology that we are working to bring to the world is that you'll be able to build better therapeutics in less time with higher efficacy and less toxicity.
We're looking at a chart of your share price because you recently went public via a special purpose acquisition company, the good old SPAC. Why? What's it done for you?
Well, so I think first and foremost, to understand why, you have to understand what are our motivations for going public. And I'm a former public company CEO. I know what it's like to be public, and certainly there's a lot more scrutiny and a lot more work being a public company. But for us, the increased visibility of being a public company and the greater access to capital was really important. And it's important because our company has transitioned out of a phase of feasibility and research trying to figure out how we're going to solve the problems that need to be solved to bring this platform to the world. And now we've moved into a phase of formal development and manufacturing. And with that comes a lot of headcount growth, it comes a lot of expense growth, and being a public company aids us in a number of ways. The second half of that question is, why a SPAC? The last company that I was founder and CEO of went public with a traditional IPO. And yes.
Unfortunately, we've run out of time. I'm so sorry. I should have given you more guidance on the timing. Sujal Patel will have to get more information on why a SPAC. Nautilus Biotech CEO there. Coming up, billionaires gathering in Sun Valley. We have it all. This is Bloomberg.
We've gotten a positive reaction so far. So we're hoping that it'll be another 8 months. Could be longer than that, but things are going well. AT&T team's working hard. Our team is working hard. So very exciting bringing these two companies together. We have a strategy that we've developed, and now we'll see how HBO Max does and HBO over the next year, how we do with Discovery Plus. And we'll see if we can come up with something, some best practice. Discovery
CEO there, David Zaslav, speaking at the annual Allen & Co. conference in Sun Valley, Idaho. Joining us on the latest, what's happening on the ground, the deal-making, Bloomberg technology reporter Ed Ludlow, in anything but sunny Sun Valley right now. But Ed, I mean, of course, AT&T, Discovery, the deal that was done previously. What deals are brewing up now, do we know?
Yeah, I think the narrative is around which media companies need to invest in content. A lot of the discussions behind the scenes are who is short, because scaling up seems to be the way to survive. A lot of people here cite Amazon's purchase of MGM, for example, as a wake-up call that if you don't scale the business, you don't invest in content and different properties, then you'll be left behind. The obvious targets that everyone's kind of awkwardly talking about are Viacom CBS, whose Paramount Plus service is a little bit sort of behind the pecking order of others. And then there's also, of course, Comcast, and lots of questions about the future of Comcast and its streaming as well. But beyond that, you forget that a lot of this is not just about M&A specifically, it's about other deals, financing, corridor talk, where bankers meet with CEOs and plot their future plans.
Yeah, we can see pictures of the plotting, the discussing, the waving of Bill McDermott. I mean, who's there? Any interesting conversations you can see happening? Any awkward conversations you can see happening?
Yeah, especially with all the news flow, right? You have this, antitrust news in the news cycle at the moment. You also have the news about the Jedi contract. We haven't actually seen Microsoft CEO Satya Nadella yet. Sources tell me that Jeff Bezos is on his way. He's definitely coming, I'm told, but hasn't arrived yet. And now, of course, Google's in the fray on those cloud contracts as well. So imagine all three of those men in the same room. There's also, everyone is praying for a shot and a look of Facebook CEO Mark Zuckerberg and Tim Cook being in the same room with all of the data and iOS discussion that's been going on. I also asked Sheryl Sandberg, does Facebook have any comment on President Trump's lawsuit? But she didn't. She simply waved, said hello, and went in and had her breakfast.
Trying your very best, Ed. Anything that we should be looking out for tomorrow?
Yeah, I think that, more arrivals are expected. If Bezos does come, there will be questions about Blue Origin because July 20th is not far away. And if he's here schmoozing, here in Sun Valley, should he not be preparing for his trip into space? I mean, other than that, the keynotes that are happening are really about the economy. They're about COVID. There are a lot of healthcare specialists here as well. But what I'm hearing is that this is a great time to speed date. One executive told me this morning he's had more meetings with investors, with his customers, with his business partners in one day than he's had in the last 18 months. It's all about FaceTime. And of course, this is the summer camp. You wouldn't think it with all the rain and storm happening around me, but this is the summer camp for billionaires. And they're out there on their kayaks and on the golf course having a good time and schmoozing with one another.
That sort of dating. Ed Ludlow, we thank you so much. Stay warm, get some sun out there. Meanwhile, when Phil Libin created note-taking app Evernote back in 2007, he was making a bet that smartphones would be the next big thing. Now, he has a new company built around what he thinks is the next transformative trend, video chat. Working alongside video services like Zoom, Libin's new company, is looking to build more features than the traditional video software. Phil joins us now. Phil, we've just been looking at some really cool backgrounds that you've been developing. I mean, everyone's schmoozing in face in Sun Valley, but I thought we were all going to be doing meetings far more productively online like this. And tell us what was sort of initially a joke becoming a reality for you. Oh, I'm having some technical issues. I'm not sure I can hear you, Phil.
Hello.
Hey, there you are. What a great
totally
background. So is this background a real one or not?
This is, everything in my life is pretty fake at this point. So this is not my real background. I kind of wish it was. I just have a blank wall. But I am in very lovely Arkansas, Northwest Arkansas right now in Bentonville, which is nice. I decided since the world kind of gives us opportunities now to live and work wherever we want, I would try it out, and it's working great.
You're going to try it out. So talk to us about the birth of because it's a product out of All Turtles, which is what you went on to found after moving on from Evernote. You had a go with venture capital. You then were helping birth new companies with a studio that you formed, and this is one of them.
Yeah, we literally started this as a joke, which you could tell by the name. We started it because we were just really bored a couple of months after the pandemic started in lockdown, and we were just trying to make the best of video. And we thought that the reason that all of our meetings were so ineffective on video was because no one really knew how to be engaging or charismatic. We were just trying to make people laugh and smile and be a little bit more effective. And it just took off from there. But now I think we're kind of in this phase where we can choose what to do in person and what to do on video. Video doesn't have to be a poor substitute for being in person. We can do the best of both.
I have to say, I'm very impressed because with your faux background, you're not sort of slipping in and out of it. Because I think that's kind of the giveaway. Everyone wants to have a really cool background. They want to hide perhaps the mess that they've created behind them. But they sort of end up getting sucked into the ether when they're on it. How are you trying to sort of fix for that to a certain degree?
I think we're really about the presenter. I think, a lot of video companies kind of think that the video quality is the most important thing, and presentation companies think that like the slides are the most important thing. But really what's the most important thing is you, it's the human. It's your face plus the materials plus the slides you're showing. Like that's what makes for effective communications. That's what gives you, communication superpowers. And so we're just trying to make something that's a humane system to let people be engaging on video.
How much are you finding demand still there for this, Phil? Like, as we all get excited about meeting again in person, as we all do slowly come back to various offices, are people demanding this as much as they were back in mid-2020?
More so. And I think this is really the big change, right? Is when we were in mid-2020, in the middle of the pandemic, we were just trying to make the best of a bad situation. And that's okay, but it's never fun. But now we can kind of transition from thinking about how to survive the pandemic to how to thrive in the world that comes after it. And so our rule is that you should do in person what's better in person. For example, being in Sun Valley and schmoozing with the people there, like that's better in person. And so they get to do it in person. But you should do on video what's better on video. And there's a lot of stuff that's better on video, namely almost all types of information transfer ought to be done asynchronously and on video. It's the combination of these things that I think is just literally changing the world.
Phil, you put so much more thought into the preparation for this interview than perhaps many else would, because you've got so many slides to back it up. We love it. I mean, at what point did you get serious about this? I mean, you've been a serious business leader before. You've grown a serious business. At what point did you think, okay, this is going somewhere?
We're going to get serious any day now. It's bound to happen sooner or later. I think we actually learned an important lesson, right? Because we did start off just by goofing around. And I think what we learned is that that's actually, like, having fun is an absolutely crucial and indispensable part of communicating effectively. And I think we all got good at doing it in person, and then we were just forced onto video, and no one knew how to do it on video. So this idea of letting people have some personality and some emotion and some expressiveness with this new medium is very much the key. So I think we're a serious business. We have many great customers, we have many great investors, but fun is a crucial element of it that we're not embarrassed about. We are about having fun and effective communication.
Where are you going to take this? Are you being asked about special purpose acquisition companies, dare I ask?
Yeah, that's all kind of above my pay grade, the eventual path to being public and all that stuff. We did just today announce our newest round of funding, which I'm really happy about. We just raised a $100 million B round led by Lydia Jett, who I've been wanting to work with for years. So I'm glad for the opportunity at the SoftBank Vision Fund. And so right now, all that means is we have the resources, we have the ammunition to just go heads down for the next couple of years, try to make a really great product, try to get it into the hands of as many people that could benefit from it as possible, and then we'll figure out what eventually happens to the company later.
How do you figure out not being on mute at the start of the interviews?
I am good with technology, it turns out, except in high stress situations like this where I totally screwed up. That was 100% my fault.
Phil, it makes all of us. We have all been there, all done it, and that was a beautiful presentation. It's so good to be reconnected. Thank you, Phil Libin, of course, CEO of
Thank you.
Congratulations on the new funding round. Meanwhile, coming up, the Big Apple's big push for climate change, how Governor's Island in New York City will become a living laboratory for climate research. This is Bloomberg. So changes are on the way at the Bill and Melinda Gates Foundation. Now, the foundation plans to add trustees to expand oversight. Plus, it says that Melinda French Gates could resign from the governing board in 2 years if she and her former partner find they can't work together. Meanwhile, the former couple have added $15 billion to the foundation's endowment. Meanwhile, last September, New York City Mayor Bill de Blasio declared that Governor's Island would become a hub dedicated to preparing the world for the impacts of climate change. Now, a global competition has been launched to find an institution for a climate solutions center. Joining us now is Governor's Island Trust President and CEO Claire Newman. Fascinating. For me personally, we both sit here in New York. You're a lifelong New Yorker, and I go to Governor's Island a lot with my kids, but always been so aware that perhaps the buildings were a bit decrepit, more could be done with just an adventure playground for me and the young ones. What are you hoping to build here?
Yes, well, the adventure playground is fabulous, but I think a lot of what we've been thinking about is the extraordinary momentum that's been built on Governor's Island with the creation of this beautiful park space, with the activation with environmental programming, educational programming, arts and cultural programming. And now we're at this place where we're ready to take the next step and hopefully breathe life into those buildings and really use the island as another way to add value to New York City's fabric. And in this case, the idea we've been working on with the city and City Hall for so many months and years is this concept of dedicating a lot of the space and buildings on the island to creating a new cross-disciplinary hub for climate research, education, and most importantly, solution making for the city.
Okay, so who will be based? What investment needs to go in first? Is it sort of doing up the buildings? Does that create jobs in and of itself, I'm assuming?
Absolutely. I think what we've thought is the right way to start is to really begin with this competition, as you said. And the city has put $150 million behind that effort with the idea that Governor's Island has always been envisioned as a home for education. Mm-hmm. So we're focused at the moment on attracting an educational or research partner who will come to the island and either build a new building or revitalize one of the fabulous historic buildings that are there, and dedicate the space to a new approach to climate adaptation research, where we put the science alongside policymakers, alongside advocacy efforts and environmental justice efforts. And I think most importantly, and why it's exciting to do something like this on Governor's Island, is then use the fabric of the island as a living laboratory. So yes, when we rebuild these buildings and reconstruct these buildings, they should really display the latest and greatest technology about how to do truly resilient and sustainable urban development.
Okay, so talk to us about what practical solutions you want to see. When you've been lifelong in development of cities, you were over at the Brooklyn Navy Yard as well. How do you want to see New York evolve in a more climate thoughtful way?
I think, the city has done so much already with respect to climate issues in terms of policy and investments and resiliency. But when we went out and did research on this idea, one of the things we heard loud and clear is that climate adaptation has lagged behind. And now as we're faced with increasing heat waves, we all experience this, right? Increasing storms. How do we make the city fabric itself much more resilient? So Governor's Island has 2.5 miles of waterfront of the city's 520. That's a perfect place to experiment with new types of flood mitigation protection. Can we think about how we harden the energy grid to not just be much more sustainable, but also be able to withstand extreme heat waves? And so by bringing this research hub alongside what New York is so great at, which is talent and exciting young businesses and innovation, we think that there's a real opportunity to bring things back into the city's building stock and into its shoreline to make sure that for New York neighborhoods across the city, we're all much better protected.
It's so interesting. We've just been talking a lot about online collaboration rather than in person. How do you see that evolving?
Yeah, I think, we've all had our eyes open to the glory of Zoom or whatever the right technology is, but there is something to being in person and being in a collaborative setting that I think can't be replaced. You've been there. One of the great things about going to Governor's Island is when you go, you feel like you're a little bit away, and you feel like you have the chance to really think in a new way about pressing issues. You go to the top of a hill on Governor's Island and look out over the waterfront, and you can't help but be confronted with the realities of climate change in a way that I think can't really be replaced by a more virtual approach. One of the strengths we see in this concept is that it's New York, and so we have the opportunity to bring together folks from the nonprofit sector, from the financial sector, as we talked about, business and technology, all together in one place in the center of New York Harbor to actually collaborate in an in-person setting and hopefully come up with great new ideas.
Is that talent already here, or are you hoping to woo it, to bring it back or make a new hub?
Both. The project on Governor's Island is in and of itself expected to create over 7,000 jobs, but I think it also is really a play for the city to help capture a huge part of what's going to come in the green economy. And we have an extraordinarily talented workforce base, but it's been, I think, widely talked about how across the country, across the world, we need to be investing back into talent that can really grapple with on-the-ground climate solutions. So this hopefully will take advantage of both what we all love about New York, which is the diversity of its talent, but then help us to really build and create jobs across the city over the years ahead.
Very cool. I can't wait to see what you build. Thank you so much, Claire Newman, President and CEO of Governor's Island Trust. Now, on a side note, Bloomberg Philanthropies, which along with Bloomberg LP is owned by Michael Bloomberg, helps fund the redevelopment of Governor's Island. Now, coming up, an electric listing for XPeng. We hear from the Vice Chairman and President on the reason behind the dual listing in Hong Kong and why he's not worried about the competition with Tesla. That's next. And meanwhile, the world's richest person got a little bit richer. Jeff Bezos' fortune reached a record $211 billion after Amazon shares rose following the Pentagon's announcement on Tuesday that it would share a giant cloud computing contract with rival Microsoft. The last time anyone on Bloomberg Billionaires Index neared that milestone was in January when Elon Musk briefly hit $210 billion. This is Bloomberg. So China's Huawei Technologies says it was treated unfairly when the US government called it a security threat. Still, the company is seeking to redress from the American jury system in a major patent fight with Verizon. Now, a trial began on Wednesday in Marshall, Texas. Huawei claims that Verizon is using its patented networking technology without a license. Meanwhile, Verizon claims, that Huawei is using its patented inventions. Bit of tit for tat there. Meanwhile, shares of EV maker XPeng ended flat in its $1.8 billion Hong Kong dual primary listing. Bloomberg's Yvonne Mann spoke with XPeng's vice chairman and president, Brian Gu, on why he decided on the dual listing.
Well, I think having a listing venue closer to home is always in our strategy. I think as a China consumer brand, I think we want to have our customers ultimately be our shareholders as well. So coming to Hong Kong gives an opportunity to achieve that goal.
Some Chinese companies listed in the U.S., though, are hedging their bets, I guess, or hedging against any kind of possible delisting from U.S. exchanges. And now it seems like there's this newfound pressure from Chinese regulators when it comes to data security, data privacy. To what extent do you think this Didi probe is only going to speed up more Chinese companies to come back home and list?
Well, I think overall, the regulatory environment is becoming more and more focused on the softer side now. The data side, the privacy side, the national security side. Those were not probably focused as much. But I think it's something we anticipate because we see the global regulatory environment gets tighter and tighter. It's just not in China. The data privacy, data security is a big topic in Europe. That's why we're building up an effort there. In the U.S. too, I think people focus very seriously on these issues. So I think as a company that operates globally, you have to really be prepared to face and to address all these issues and its regulatory oversight.
Let's talk about the competition. Tesla seems to have run into some issues in China, whether it's recalls of nearly all its vehicles in China, the software issues. Does the timing seem right now for XPeng to build your war chest and gain some ground?
Last year, we saw Tesla lowered prices on their product several times, and people asking us, okay, whether that will impact XPeng because we directly compete with Tesla on our models. But the result is actually we both thrived. We both grown quite well and tremendously, expanded the pie and market share for China. So I think ultimately having a good competition and will strengthen yourself. And I think Tesla is a tremendously powerful brand. It has great technologies and products. So we think they still continue to kind of do well in China. But whether they will have the dominant share like they had before, that's probably something we'll watch. That will probably be difficult to maintain, I think.
It seems like many companies are also trying to raise money, raise capital among the EV space right now. How does this all bleed into the industry, do you think?
Well, I think it will means that the catalyst for converting from ICE to EV will be even greater. There will be more players coming up with better, cooler-looking products, better infrastructure be built by the EV makers as well as the third-party participants of the industry. And at the same time, there will be a lot more advanced technology. The advancement will be faster. So I think the investments into this sector will generate higher growth and expand the pie for everybody.
Are you still on track to break even in 2023?
Well, I think our investment phase is going to be in the next 2 years. So I think that will naturally lead us to the end of 23 or early 24 to look for a potential break-even point.
What do you see when it comes to your outlook of the EV market? It seems like Europe is seeing quite a bit of momentum that's building here when it comes to EV penetration. Do you think that China can still be the leader in terms of the largest EV market?
I believe China will be the largest EV market because unlike markets in the past, which is really pushed by the government incentives and subsidies, I really see a consumer interest in EV products, more specifically smart EV products in China.
Brad Gu of XPeng speaking with Bloomberg's Yvonne Mann. Now that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow when we're going to be joined by the CEO of Users Health, Jonathan Bush, along with TikTok content creator Kayla Kilbride, who uses social media to elevate female voices in finance. Meanwhile, before we go, expect plenty of celebrations in my hometown of England and over social media as the country's football team, you call it soccer, has moved through to the Euro 2020 final. England defeated Denmark 2-1 Wednesday in the semi-finals at Wembley Stadium in London. England will play Italy in the Euro 2020 final on Sunday, also at Wembley. So it's going to be me versus John Ferro, but as we say in the England, it's coming home. I'm Caroline Hyde in New York. This is Bloomberg.